Hey everyone, so today I'm going to show you another pretty solid scan. This one's called the sequential entry scan, and it comes from a pretty prominent investor slash trader slash analyst named Thomas DeMark. He had a book that came out about in the late 90s, I think. It's called like the New Market Timing Techniques, but he's really known now for being on like shows like Mad Money and he's really known for his company, which is called DeMark Analytics, that a bunch of money managers and hedge funds they use it all the time. But anyway, he has this sequential entry scan that basically looks for stocks where the last 9 days have had closing prices that have been increasing, similar to Gary Smith's classic long. But the difference here is that one, he's looking at over 9 days and he's comparing it with the previous 4 days. So the close of 4 days prior specifically. So I'm going to go ahead and write this one out and show you exactly what it looks like, and I'll be able to explain it once again. But if you have any questions, as always, go ahead and drop the comments below. So let's go ahead and get started with the first line, which is the type is stock. And here we want to see that today's close is greater than 4 days ago. And this is kind of the pattern that we're going to continue to repeat for each line. So we're going to do and 1 day ago close is going to be greater than 5 days ago, right? So we're comparing that range, that 4 days. So, and then we do the same thing. 2 days ago close is going to be greater than 6 days ago, right? And you can actually copy and paste it. It might be faster. So if I were to just copy and paste it, and then I just change the numbers, right? And you're going to do that all the way until you have 9 days ago and 13 days ago. So, and so I'm going to go ahead and actually copy all of these. All right, and then we're going to go ahead and just update the numbers. 5, 6, 7, 8. And to save time in the future, you can always save this scan right here where it says save as. Okay, and then we're going to go ahead and change these as well. So 8, 9, 10, 11, 12, and 13. But the difference here is on this last day, you want it greater than or equal to. All right, and so we're going to go ahead and run this scan, and we should see our results. Okay, so we have about 545. I'm actually going to filter it a little further and add the country is US and the close price to be greater than $1 and the close to be less than, we'll do $400. Okay, I'll go ahead and run that, and we have 391 results. Okay, so if we filter out the closing price, we can look at Domino's Pizza as one example. And you can see that based on the way we configured the scan, you can see that this has had a significant increase over time. Right? Let's look at another example. So this is looking purely at closing prices, so you're going to want to use other indicators. But this is something that you can actually adjust if you don't want to look that far out. But this is a pretty good, let's look at American Eagle. It's another one. So you're seeing that the trends are pretty consistently. These are like growth stocks that I would consider. So let's look at one more example. And let's look at let me go ahead and filter this out. Let's go ahead and look at Anthem. Okay, this one is fairly consistent, it continues to grow. It's pretty hot right now, but here's another example of Anthem Inc. right? So my other indicators are showing that it has crossed the MACD, but it is kind of, it looks like it's plateauing, or in this case, dipping a little bit. So I might want to wait um, before, because it is hot. So that might be a stock that's actually reversing and going on a downtrend. So if you plan on shorting stocks, maybe this is something that you can consider. But I hope this was helpful. Like I said, if you have any questions, go ahead and drop them in the comment. Any comments or anything like that as well, go ahead and drop them below. And then tomorrow I'll show you another example of a pretty solid scan.